Hey, welcome to the channel. Question for my renters out there who are currently renting a home. Did your potential real estate agent or tax professional ever share with you that the benefits of owning a home and selling it is that you get to make up to $500,000 on every transaction and be exempt from capital gains taxes? Did they share that with you? And did they share with you you can repeat that process on every 2 years and be exempt from capital gains taxes? Because if they didn't share that with you, I want you to stay tuned through this whole entire video. Go ahead and hit that like button and subscribe because we want to make sure you don't miss any of this important information that we're about to share with you. Okay, real life story. When I purchased my first home at the age of 25, I started looking for my home when I was 24 years old. I started the process of looking during that time. And no one never shared with me the actual benefits of owning a home. The only thing they ever shared with me was the tax benefits. And as a young person, I'm sitting there thinking, yes, there are tax benefits, but tax benefits doesn't amount to numbers in my head, right? It's not giving off alarms and telling me the astronomical numbers I can make from a home. It's just telling me about tax benefits and tax deductions. That's the only thing that everyone ever shared with me. But I didn't see the true benefits. All I knew at that time is that I wanted to put my family under a home and I was getting tired of renting. So I went out and started looking and I actually had my first house built. So I started this process when I was 24 and by the time the home was built, I was 25 years old before I even closed. And even after I closed on the home, I truly didn't understand the value of the home. Now again, everyone told me about the tax benefits and I understand that my property would appreciate in value, but I had no earthly idea of what I could actually do with their homes in terms of selling it. That's when I later learned in the tax code that if someone were to purchase a home, own it for 2 years, and live in it for 2 years, they can make up to $500,000 and be exempt from capital gains taxes as a married couple. And if you're single, you can make up to $250,000 and be exempt from capital gains taxes. Now, that totally blew my mind away. I was totally blown away by that. And if I had known that information, let's say when I was in high school, guess what, guys? I would have purchased a home sooner than later. And the reason being because if you look at it, right? Think about it. If you're purchasing a home every 2 years, and I don't say you have to purchase a home every 2 years, but just think about it. If you were to purchase a home every 2 years, that gives you an opportunity to make money off of that home. You get an opportunity to make money. See, think about it. Every 2 years, up to $500,000, that's $250,000 per year. Or if you're single, you get $250,000, that's $125,000 a year that you're making in your pocket. Now, I'm sharing this information with you today because I want you to take action. So what I'm going to do, we're going to venture into the next part of the video where I actually show you in publication 523, that's right, publication 523, if you do not have that document, I want you to actually go to the IRS's website right now and actually go get publication 523. And what I'll also do for you, I'll put a link in the description of this video so you can get access to the document. So I want you to be able to follow through as I go through on the next part of the video. Okay, as discussed, I indicated that we'll be navigating over to publication 523 that talks about the sale of your home. So I just want to kind of go through this document with you so you can fundamentally understand where I'm coming from when I use terms like own a home for 2 years, live in it for 2 years, make up to $250,000 as a single person or $500,000 as a married couple on the sale of your home exempt from capital gains taxes. This document kind of goes through that with you and explains the details. So I'm going to just navigate it with you, through it with you right quick. Again, it's publication 523. You can pretty much go to the IRS's website and put in publication 523, and it will provide you with a PDF document of the details that we're going to go over here today. So looking at it, let's go over to it, right? And so right here, you'll see publication 523. We're going to click on the number 3 because that goes into detail. And it says, does your home sale qualify for the exclusion gain? And it kind of goes into detail and tell you right here that to qualify for the maximum exclusion gain of $250,000, and that's referring to if you're single, $500,000 if you're married filing a joint return. And so that's pretty much telling you. And there's an eligibility test, right? And so let's kind of go through and navigate and look at parts of the document so that we can fundamentally understand the whole entirety here. So it looks at, number 1, let's look at the home date of the sale, right? So determine if you meet the eligibility test to qualify for partial exclusion. You will need to know the home's date of sale, right? And we're not going to go into, because this is really kind of going into detail about the partial exclusion. We want to look at the whole totality of, pretty much obtaining the capital gains tax exclusion, right? So what they're looking at is the sale date of your main home, right? And so the sale date of your main home, let's say you purchase your home, and let's use today's date, January 1st. The date is January the 12th, 2025, right? So let's say you, sell your home or purchase your home on January 12th, right? And so then we'll look at the eligibility test to make sure, you determine that you actually meet the criteria to be eligible for the exclusion, right? And it also talks about disqualification. So let's also look at disqualification too, just for purposes here. They said if you acquired your home through a like-kind exchange of 1031 exchange, what that is simply saying here is that, look, if you purchase your home and it got put into a 1031 exchange, 1031 exchange allows you to be avoid the capital gains taxes. So what they're saying is that you're not going to, sell your home and put it in a 1031 exchange. Then you're going to try to take advantage of capital gains taxes on a double aspect. That's what they're talking about here. So a good example of that, you purchase a home, put it in a 1031 exchange tax haven, right? And you try to sell the home immediately after that, right? You're not going to be exempt from capital gains taxes because you're trying to avoid sort of like taxation twice. That's what it's simply saying here. So you sell it within a shorter period of time. That's not going to happen here. They're not going to let you kind of double dip. The other thing is that if you're subject to expiration tax, right? So that's sort of like what they're saying is here is that let's say you renounce your U.S. citizenship and you're selling your home, but you've already renounced your U.S. citizenship. They're saying like, you're going to pay your taxes. You're not going to get rid of your citizenship. Then after you get rid of your citizenship, try to sell your home and try to, be exempt from taxes. That's not the way it works. So I just wanted to cover those two disqualification aspects there, right? So ownership. So what they're saying is that if you own your home, right, for the last 24 months and live in it, you would qualify if you sell the home within the 5-year period. So again, what we're saying here is that, and again, I say we, what the IRS is saying, I use the example, you purchased a home January 12, 2025, right? So that means you would have to around January of 2030 to sell the home to be exempt from capital gains tax, right? So you can continue to sell your home every 2 years. But what they're saying is that you need to do it before the 5-year period if you're going to do it. So if you purchase January 12th, 2025, and you sell, January 12th, 13th, 2027, you can do that. If you, purchase another home and sell within sell 2 years later, you can continue to do that. They just want to make sure you do it from within that 5-year period. That's what they're simply saying here. So it's like a rule that's put in place just to make sure, you follow the guidelines. Just make sure you follow the guidelines on that. And residence, eligibility is that they want to make sure this got to be your primary residence. So if you're buying a home, this must be your main home, right? However, here's the exception. Let's say you purchase your home, right? Your main home, and you decide after 2 years, you're going to move out of your home. And instead of selling it after the 2-year period, you're going to rent it. And you're going to purchase another home, and the other home is going to be your main home. Does this current home still qualify? The house that you just rented out still qualify? Yes, it still qualifies for the simple fact that when you purchased it, it was your main home. When you lived in it and owned it for at least 2 years, it was still your main home. So although you're going to rent it out and you may sell it later, that was still your main home. So you're still qualified. So you're still allowed to, as long as you live in that main home for 2 and own it for 2, and if you're rented out, you still qualify. So I just want to make sure, I just note that in there. So you qualify. So the criteria is that it has to be your main home, number 1, right? Criteria number 2 for the eligibility test is that, you have to, it can't be, you can't have a disqualification when you renounce your citizenship, right? You can't do that. You got to meet the eligibility test there. And you have to make sure you own the home, right? Own it, live in it for at least 2, then you're good there. And step 3, they're talking about here is your residence. And I know I said that, step 2 was actually the disqualification. I wanted to include a disqualification in there to make sure that, you can't renounce your U.S. citizenship. That's pretty much what it's saying there. You can't renounce citizenship. Same thing, they have some details with regards to, tax guideline for illegal aliens. Those are the more details there. I'm not going to go into details about that, but I'm just kind of mainly talking about the U.S. citizenship aspect of that right now. And so those are the criteria there. And again, your residence, own, live 24 months, 2 years. That's what it's simply saying there. But hey, what I want you to do, go ahead and if you're enjoying this video so far, like it, subscribe, because we want to make sure you don't miss any of our valuable content. Stay tuned to the whole entire video because we're going to go through illustrations and examples of how this capital gains exclusion is being used. So stay tuned with us. Now I want to go through 2 examples with you on today. The first example, I'm going to use a single individual, and on the next example, I'm going to use a family. So let's start out with the first example. James, he's a single individual. He purchases his first home. The neighborhood is, magnificent. The schools are nice. So he made a good decision in purchasing his home. He got a good deal in the home. So James lives in the house for 2 years. This is his main home. So James noticed his property has appreciated in value, and his property has, gone sky high in value. So what James does, he makes a decision to sell his home. So James sells the home after 2 years and makes a profit of $250,000 on the sale of that home. Now James, because he owned the home and lived in it for 2 years, has sold it, and he's exempt from capital gains tax. So what James goes out and purchases another home, finds a good deal on the home, and actually during this time on the second home that James has, what he simply decides to do, he notices this house goes up in property value, right? So what James decides to do, he decides to rent this home out to someone else and decides to make another purchase. He purchases his third home. Now, on the home that he's renting out, he's getting rental income off of this home, and he's already in his third home, right? So on the second home, he is now hitting at year 3. This is the home he is renting out. He said, I'm going to make a decision. I'm at year 3 now. I no longer want to keep this home. I want to sell it. And he's already, the property has already increased. He sells it. Now this home, he makes another $250,000 on this home because he purchased a good home and where good schools are. They do well maintenance of the lawn. Everything is kosher there. So he sells this home. So on this particular situation, since James rented the home out, he has to consult with his tax professional or CPA because the rents may affect. He may be able to take in capital gains taxes for this home because he is renting it also. So he'll have to consult with his tax professional or CPA to determine if he can take the full $250,000 on that. Now let's look at an example with a family. Now this particular family, right? This particular family has 2 kids. They're in a school district, right? And in this particular school district, they love the school district. They had purchased a home in a school district. And so what they actually do, they're in their 2nd year of owning this home, right? This particular family, is making a decision. Oh my God, my house is going up in value. This house is peaked at about $400,000. It's going up in value. So what they do, they're making a decision. Oh my God, do I want to actually sell the home and make money off of this house, right? Or do I try to find a house, that keeps my kids in the same school? These are decisions that a family has to make. They can't do like James and go out and purchase another home and try to make money off of the home. They have to think about their kids. So what they do, they find another house in the same school district, right? In the same exact school district, they'll be able to keep their kids in the same school. So they sell their home and they make a profit of $400,000. And so they're exempt from capital gains taxes, again, because they're a married couple and they get to take up to $500,000 exempt from capital gains taxes. So what they do, they now have their 2nd home, right? And in this 2nd home, they stay in it for 2 years. Now this property has gone up in value. Now it's going up at about $300,000. For this particular home, they have to make that decision again. Do I sell or actually rent my home out? What do I do? So they make the decision. They find another house with the same school district, same school. So they rent out their home and they rent it out and they have someone else in the home, and now they're on that 3rd house. So they're renting their home out, the 2nd home, and they're in their 3rd home already. So on the 3rd year of renting that house out, they make a decision. Oh my God, do I sell this home or rent it out? Because it's now going up in significant value. Now it's valued at $500,000. So what do? So the decision that they have to make is they're going to sell it or continue to rent. But now they're within a 5-year period. So if you remember in the previous part of the video, if you live in a home 2 years and own it for 2 years, you have to, within a 5-year period, make a decision that if you're going to sell that home to get the capital gains taxes. So what they do, they sell the rental home, right? They sell the rental home, get rid of it, and they remain in their 3rd home. So these are just 2 examples that you can actually use that are applicable to, that's going to be applicable to your life, whether you make the decision to sell or rent your home. Hey, if you enjoyed today's video, like our video, subscribe, because we want to make sure you don't miss any of our upcoming content. We want you to be notified about all of our upcoming videos. We'll see you in the next upcoming video.